Hi dear traders, today is Friday, February 11th and I'm glad to greet you online again and present you with a fresh market review prepared for InstaForex. Yesterday, the market was digesting a red-hot inflation report of the US. The CPI printed a new multi-year high in January and I'm going to tell you why the market gave an interesting response to the data. Yesterday, the US stock market was breathing by a double whammy. On the one hand, the evidence of soaring inflation, and the other hand, a speech by James Bullard. Now let's discuss technical charts of popular trading instrument. Let's analyze gold on a shorter time frame. What was going on yesterday? I saw an interesting price action yesterday triggered by the US CPI report. Let's check the economic calendar for the inflation data. The core CPI remained flat on month, defying expectations for a downtick. The question is why the market went into a panic. I don't see any cause for concern. The CPI was not the only news yesterday. The US initial unemployment claims were released at the same time. They declined last week more than expected. Why I'm so ambitious about forecasts and actual figures? I want you to be financially savvy. I don't want you to drain your modest deposits at the moment of a new release. Besides, I myself spent a lot of time analyzing the economic calendar through special software. I know a lot of traders who earn big money in the early 2000s from the news releases, and this background prevents me from getting into a panic. Back to the chart, we see a sharp fall of the gold price. Then the price rebounded and was growing for 3 hours. It means that traders were betting against the fundamental picture that favored the strength of the US dollar. As a result, following a decrease of 80 pips and the price spiked to 100 pips. I guess a lot of fans of fundamental analysis were going to jump from the bridge into the water. Then they reconsidered. Eventually, the US dollar asserted strength by the end of the American session. Gold's strange moves were triggered by James Bullard, who scares off everyone with rapid rate hikes. What is my outlook for gold? I don't see any wreck in trend, so gold is extending its growth. I still believe in my old plan that gold will climb to 1,800. Silver slipped for a while yesterday, but the overall trend remains bullish. The same is true about platinum and palladium. The euro-dollar pair made 3 moves yesterday. The first one is the news when stop losses were activated. The second one is a logical market response for the medium term. Then Bullard came up with his ideas. Eventually, the pair went downwards and traded lower in the Asian session. The pair made a lower low after the CPI. Today, on Friday, we should not expect any mega trends, and a weekly engulfing of the last week is still valid. Now the pair is trading flat. If you are an impulsive trader and apply the Fibonacci grid, you can consider the move of last week and partially this week to be an impulse and wait for a 50% retracement. So anyway, your market entry with buy positions should be at the 50% Fibonacci level. I think it's too expensive to buy the euro-dollar pair now. The pound sterling. The pound sterling formed a pin bar yesterday and made sharp price swings. I closed some of my positions from the 50% retracement to an intraday high. There were 1,300 pips. I hope you also closed some of your positions and left for 1.44. The dollar-yen pair challenged the highs yesterday, and it didn't break them and left a double top. I reckon the highs will be broken in the near future. That's all I wanted to tell you today. See you online next week. Bye-bye.